What's up, traders? Trend is your friend until it bends in the end. But you still can maintain your friendship with the trend if you can spot the trend reversal in the right time. So in this video, I'll discuss 3 important reversal patterns that you need to know as a trader. I'll discuss in detail what they are, how to spot them, and how to trade them with high risk to reward ratio. Sound interesting? Then smash the like button for me. If you're new to the channel, don't forget to subscribe and also press the bell notification button so that you don't miss out any of the content that I release almost few times every week. With that said, let's first start with first reversal pattern. Start with reversal pattern. First, let me explain in what situation a reversal pattern may not work. Remember, if you trade a reversal pattern in isolation, the reversal pattern may not work. You need to trade a reversal pattern only in an important area of value. What do I mean by this? Say for example, if there is a strong level of resistance and you see a reversal pattern like this, a head and shoulder or any kind of reversal pattern, you can trade it with high probability. But in isolation, if you see in the middle of the chart a double top or a head and shoulder pattern, that doesn't mean anything. So if you only see a head and shoulder wherever you see in the chart and try to trade them, it may not work. It will work only if you see in an important area of value. The second way it may not work if you trade them before they are fully developed, because many traders are very impatient. When they see a head and shoulder double top before they are forming, they started to trade them. You need to wait for the pattern to be fully developed and retest, that I will discuss later in this video, and then you can trade them with high probability. Now first, let's see what is the first reversal pattern that you need to know as a trader. Reversal pattern number 1 is head and shoulder. Now head and shoulder is a very popular and common pattern, reversal pattern that many traders like to trade. You may have heard of it many times, but do you know why they are formed and how to trade them? If you are not sure, then stay tuned until the end of this video, because there is a lot to take from this video. So first of all, let's discuss why a head and shoulder pattern is formed. Now when you see a trending market, say for example uptrending market, how they form? So what they will do, they will create a higher high and higher low. So this is a common uptrending market pattern. It may not be exactly like that, but something like this. But you know that a trend will never continue forever. At some point they will reverse. So when you see this trend approaching a resistance, say for example, say this is a weekly resistance which is very strong. Monthly, weekly, daily resistance are very strong. So you are watching the price action on the lower time frame, and then the price approach this weekly resistance. After going to this weekly resistance, what happens? Say for example, the price went above, created like this, and then dropped below. Okay, so as a uptrending market, what it should have done every time, it should have created higher low to maintain its uptrend. But what happened later? The price dropped below the previous swing low and then couldn't break this high. Instead, it has created a head and shoulder pattern like this. So what in that case, what you have seen, that the price, instead of creating a higher high, it has created a head and shoulder. That means it couldn't create any new uptrend. So in that case, what you will be doing is basically you will be waiting for a break of this neckline. Now when you see the price has broken this neckline, then what you can wait for a retest of this previous support as a resistance, and that is where the trade is high probability, because when it has tested this previous support as a resistance, that means this pattern is a reversal pattern and the price is ready to move to the other direction, and that is when you can enter the trade. Now let me show you in real chart how you can spot this kind of pattern and what I mean by that retest and entry candle. Okay, so let's see this example on Euro GBP on the 4-hour time frame. Now in this example, look at this here. This instrument is here on a resistance. So this is a very important level of resistance. The price is at the top. This is basically a weekly resistance. So when you see an instrument in this kind of area of value, this is where you can consider the head and shoulder or any kind of reversal pattern is very important. Now what happened, the price when it came here in this important area of value, the price has created a nice looking head and shoulder pattern. So what happened after moving here, the price, this is the head, this is the left shoulder, and this is the right shoulder. As soon as the head and shoulder pattern is formed, it is not good idea to trade immediately. Sometimes I trade because when you are experienced enough, you can spot even before they are forming. But if you new trader or even an intermediate trader, the best way to trade this kind of head and shoulder pattern is to wait for a breakout of this neckline. So this is the neckline because the price acted here as a support here. When with this red candle the price is broken, then what you need to do, you need to put it in your watch list for a retest of this support as a resistance. And you see that with this red green big candle, this is your entry candle. So when you see a retest like this, what happened, what you see, that clearly this support tested here as a resistance and then dropped to the downside. So when you see a pattern like this, the price drop to the downside, that is where you can enter the trade from here. Stop loss above this high. Now you can take profit 1 to 2, 1 to 3, whatever you want. So this is the right way to trade a head and shoulder pattern. Now let's see one example for an inverted head and shoulder pattern where the downtrending market may reverse. Look at this example with the same Euro GBP, but it is an inverted head and shoulder pattern. So this is the same thing, but this is in a downtrending market. Now what you see here, there is a clearly defined head and shoulder pattern. So you see that the price was coming, creating a lower high and lower low, and some point what happened, the price failed to create new lower low. Instead it created a higher low and started to move to the upside. So if you draw a resistance here, so what you see that the price resistance here. Now when it has created this head and shoulder pattern, the price broke to the upside, and then what you need to do, you need to wait for this resistance to test as a support. And when you see this candle is formed, this red candle, what happened, it is standing out from any other candle, came here, tested this resistance as a support, and then you see a rejection to the upside. So after this red candle, you can enter the trade, stop loss below this low and take profit. You see that the price started to move up, so you can take profit as 1 to 2 or 1 to 3, whatever your trading strategy is with. Now let's see what is the next reversal pattern. Reversal pattern 2 is double top or double bottom formation. Now I have a separate video only on double top or double bottom formation. I will link above, and also there will be link in the description. This video only for to know everything about double top and double bottom formation, but here we will discuss in general how you can spot and trade double bottom and double top formation which is another kind of very common and popular reversal pattern. Now first let me explain the concept behind double top or double bottom formation. Now as usual, we discussed that when a market is trending the same way, the creating a higher high and higher low in an uptrending market, so you see a resistance here, say weekly, daily or monthly resistance, and the price came here, hit that resistance, and then what happened, instead of it create a higher high and higher low, it couldn't break the previous high and created a double top formation. So when you see a double top after this break of this neckline, you can watch the pair for a retest of this previous support as a resistance, and then you can trade from here with a very good risk to reward ratio. Now let's see an example where we'll see how a double top or double bottom formation works. Okay guys, so let's see this example on Aussie dollar. Now let's see this example for a double bottom formation. Now in this double bottom formation, you see there has been a clearly defined double bottom, and after this double bottom, what you see that before the price was coming creating a lower high and lower low, finally it created double bottom formation and then broke this double bottom above and change its trend from a downtrend to the uptrend. So after that, so when this double bottom is broken here, so this is the level where the price created a resistance here, broke this level and then tested here as a support. So the most traders that make mistake is that they trade from here. Now as I told you, sometimes I trade that, but if you are not experienced trader or an advanced trader, it is not a good idea, because at any point this price will start to move down. So when you will be trading is when this resistance tested as a support and then rejected to the upside. So at that point you can trade this instrument from here, stop loss below this low and take profit as much as you want, 1 to 2 or 1 to 3, whatever your trading strategy is telling. So this is one example of double bottom. Let's see another example of double top formation. Okay, so let's see this example of euro dollar daily time frame. Now as you can see that this level, this is a very important level of resistance on the daily. In the past, quite a few candles from here back to back rejected from here, creating a resistance, and also in the past here this level acted as a support here. Now in the future, when the price came here, the price has created a clearly defined double top formation. So in this double top, what you see, the price was going first creating a higher high and higher low, creating an uptrend, and finally from here the price couldn't create any new higher high. Instead the price dropped to the downside. Now when is this double top formation is broken? This is the place where it is broken, because as you can see that this is the previous support, resistance here, support here, this level is broken. Now after that, what you need to do, you need to wait for a test of this level as a resistance. So what happened, you see this with this red candle, the price testing this as a resistance and rejected to the downside. So after this green or red candle, you can trade. So entry candle is here, stop loss definitely above this high or well above, so that you are not hunted by stop loss hunting, and you take profit as usual. You can take at least 1 to 2 or 1 to 3 or more. So this is how you can trade double top or double bottom formation. Now let's discuss what is the third or final reversal pattern. The final or the last reversal pattern that you need to know as a trader is V or A-shape reversal pattern. Now I know that there is many people you'll find where they will discuss about head and shoulder and double top, double bottom, but very few people you'll find this pattern is recognized. So make sure you watch till the end to know what it is. So this V shape or A shape is something like this. Say for example, there is a resistance as we discussed before, and then what happened, the price was coming, creating a higher high and higher low. Now after coming here, as we know that we might see a head and shoulder or double top. Instead, in many cases, what happened, the price come with a big candle, a big one green candle, and next one just after this candle immediately dropped from this zone, creating a A-shaped pattern. So this A-shaped pattern is when you see a resistance and hit by a big candle. So this big candle means like standing out from any other candle, and then immediately the next one is returning back. So this is in case of uptrend, or in case of downtrend you see that a big red candle hit this support and then immediately the next one went up. So this kind of pattern is what we call A-shaped or V-shaped pattern. Now after, when you see this kind of pattern, it is a very good way to trade, because this is a reversal pattern which is likely to happen all the time in all time frame. Now let's see in real chart what do I mean by this. Now to understand V or A-shaped pattern, let's see first this example here on Euro GBP. This is 15-minute chart. Now these types of pattern more often work in 15 minutes. You can work in every time frame, hourly, 4 hour, but more often it happens in 15 minutes time frame, because when these types of pattern is formed, the last 15 minutes of a higher time frame, the price aggressively move, and that's why this pattern shown in 15 minutes more and more often. So let's see this 15 minutes chart on Euro GBP. What you see here, there has been a strong level of resistance, there has been a consolidation and created a head and shoulder here, and then price dropped well below. Later what happened, the price came to the same level. You see there has been came to the same level to the resistance, and then what you see, the price went with a big green candle. You see this is a big green candle which is standing out from all other candle. And later what happened, immediately after this the price dropped aggressively from the same area of value. So when you see this kind of pattern in such an important level, that is a sign of reversal. Now what happened after this, you see the price aggressively drop after this consolidation. There has been a big drop to the downside, so which is a big move to take. Now how do you trade these types of pattern? Now these types of pattern I normally trade immediately after closing of this red candle. I know that there has been a big gap in stop loss, that's why I normally put above this all this high my stop loss, and I take two take profit target. The first one is 1 to 1, so 1 to 1 take profit target. The other one I keep normally 1 to 2 or 1 to 3 based on where this pattern is formed. So this is when you see a return from the resistance with this such a big candle. Now let's see a return from the support with such a big candle. So let's see the example on GBP AUD 15-minute chart. So what you see here, the price was coming for creating a lower high and lower low for a very long time and in a downtrending market, until it came here, created this level of support. So in this support, what you see, the price has created a support here, and support here. Now when it was creating this support, what kind of candle or price action you see? Let's zoom in and see what it has done here. Now look at this one, there is a big long candle. So if you go to the further lower time frame, what you see, that one candle immediately came here, the other straight went up. So that is what happened. It has hit this level of support with a big candle and immediately went up. The same thing here, didn't touch exactly here, but what happened, what pattern you see, that the price immediately came with a big red candle, the next one immediately went up. Now the price tested this level quite a few times. The same thing happened here. The price came here with a big candle down and then immediately went up. So this kind of pattern, what we can say, a V-shaped pattern. That means one big candle will hit this level any time frame and the other one will immediately went up to the almost the same level. That is what we call say a V-shaped pattern. So for an uptrend it will be an A shape, for a downtrend it's a V shape. So when you see this kind of pattern, it's a sign of reversal. Now to trade this, as I mentioned earlier, stop loss below all this low and entry should be at the end of the second candle. One candle down, one candle up, and the rest should be going in the same direction. And that is how you can trade and spot reversal pattern. Now one warning is that, remember, trading is not confirmation. Trading is all about probability. The reversal pattern I discussed is always you will see some violation or some a deviation from the rules or from the strategy. That's why you always need to manage your risk. I sincerely believe that you found value in this video. If you find value, press the thumbs up button and also don't forget to subscribe. Thank you for watching. See you soon with another video.